Hello traders, it is Wednesday, April 15th, and it is time for the weekly swing trading video. We have been knocking the cover off the ball for the last 8 months or so. We're going to keep the ball rolling. We've been able to sell bullish put spreads from September through February. We pulled the throttle back. We saw the warning signs coming. We were in cash when we had the big market drop. In here, we started selling naked puts on some super strong stocks. Those puts expired worthless. We were getting ridiculous premiums. We kept selling those naked puts all in here. And so now we've got the market release and we've got actually a decent rally underway. So a lot of the put premium that we've been selling over the course of the last few weeks, reel those premiums in, buy those spreads back for pennies. April 17th was a big expiration date for us. We've got a lot of options that are going to expire this Friday. We've only got 2 days left to go, and we are miles and miles out of the money. These spreads are trading for pennies, so make sure you're out there bidding 1 or 2 cents for them, especially if you need to release the margin. Do that. Don't pay 10 or 15 cents for something that's way out of the money. That's ridiculous. So, if that's the case and you can't get any market makers to budge with what you're willing to pay for those, just a 2 or 3 cent bid, then forget it. Let it go to expiration, especially if you don't need the capital. But for those of you who are needing the capital and you want to roll and you want to work those trades into future trades, then by all means, consider what we've got on deck tonight. So I'm in kind of between a rock and a hard place this week. We've had a really nice market rally off of the low. We were expecting that, and I'm going to put up the major moving averages. We'll get our market bearings first, as always. Market first, market first, market first. I cannot stress that enough. So, what's the market telling us right now? Well, we've had a consolidation pattern right in here the last 4 days. You can see how the market rallied up. Then we had this big blow off rally. I don't know if you recall that trading day from last week where the market gapped all the way up here and it sold off the entire day. Well, the next day we came in and all of that was erased the next day, meaning the market was able to get right back up to that close. That was a nice move on April 8th. That was before Easter. That's the last decent move that we had. You can see Doji, pretty much Doji, Doji. Not a lot of volume in there today. I mean, up in here, you can see the volume starting to dry up a little bit. We had a nice bullish hammer and then followed up with a bearish hammer. So this is all negating itself. The market right now is compressing. It's looking for the next driver. Earnings season is starting to crank up. Typically, we start to see some buyers come in anticipation of good earnings reports, especially from mega cap tech stocks. I think that the early lineup for mega cap tech is quite good. So we have Netflix. Hey, everybody's staying at home watching movies, should be good. Amazon, of course, they're doing a ton of business. They're going gangbuster. Then we've got Facebook. Everybody should be on social media. Facebook should do well. So it isn't until the next 2 or 3 weeks that we get into uh, an Apple might have a little bit of difficulty given that the Apple stores have been closed and they may have some supply disruptions from China. Phone sales could be lower, but Microsoft, they should do well. So I'm thinking that mega cap tech is actually going to keep buyers fairly engaged for another week or so, maybe 2. But then I think we're starting to stretch the upper bounds of this move. And particularly as we start getting into the 288 range, for those of you who follow my daily comments, you know that this is the first target that I have is 288. I think once we get up to that level, we're going to start to see a little bit of stress, certainly by the 300 level. That's where the 200-day moving average and almost the 100-day moving average start converging at that $300 price point on SPY. I don't think we're going to get that high. I think we're going to start hitting resistance pretty quickly here. If you take that high, you take that low, and you take the difference between them, then you've got us right around that 288 level is about a 50% retracement. Everybody's a little excited right now because the coronavirus is starting to subside globally, and that's the first step of the healing process. Then we've got to see how quickly businesses get back on track and how quickly they reemploy all of their workers. Even when the workers go back, they're going to be looking around going, is there going to be enough business to keep me employed? Am I going to get laid off? I don't think I'm going to make that big ticket purchase right now. I'm going to keep things pretty tight and make sure that I've got the cash coming in. That's the type of consumption mentality that I think we're going to see probably for the next month or two until businesses really start to get some traction. They get back on track, everything will be fine. But if this shutdown lingers into May, every week that it lasts is going to be exponentially more difficult for us to recover from this. And we could start to see some credit issues. We're already going to see some credit issues. Retailers are going to be hit particularly hard. We've got anybody in the travel industry is going to be hit very, very hard. We're seeing banks start to tighten up credit. They don't want to lend because they sense that this is going to take a long time for us to recover from this. The IMF came out this week and said that U.S. economic growth should decline 5.9% this year in 2020. Those are horrible numbers. They're looking at a 7.5% decline in Europe, one of our big trading partners. So it's going to be a pretty rough patch. We should not expect a V bottom in here. So we've got some upward resistance and not a lot of room to get there. So this week, I've actually got some bearish call spreads that we're going to be considering. I see the market grinding higher for another week, maybe 2 weeks, and then really starting to stall out as we hit these resistance levels. So that's how I see the market unfolding. So let's see what we've got on deck. I'm also struggling a little bit. So first of all, we've got the market in the middle of its trading range for the most part. We're coming up on resistance. We know that there's still going to be some difficulties and some bad news ahead. The economic reports for the next 2, 3, 4 weeks are going to be absolutely horrible. So there's a good chance for a pullback in here. Yes, there is a decent chance for a rally, but the way that I see it is there's a much smaller likelihood that the market explodes higher. What's going to be that catalyst? We've already had a $2 trillion stimulus package. We've already had another $2 trillion stimulus package. There's not another one behind that. I can assure you that that would be the last and final bullet, and the government will be holding off as long as possible on that one. They want to see what happens, and by all means, if this starts to go into May, then maybe you see that extra $2 trillion. But all of that money really hasn't generated anything yet. And it certainly hasn't gotten into the hands of consumers yet. So, what's going to be the big catalyst to push us through this major resistance? Is it going to be coronavirus subsiding? No. I think that's what this rally here was all about. Coronavirus subsiding, everybody getting back to work, and I think good news is priced in, meaning no relapses around the world. As far as any other catalyst that we might possibly have, I think we're a good 2 or 3 months away. I don't think the economic numbers start to improve. I don't think the employment numbers start to improve for a while. Now, what about the downside? Is there a chance for a downside surprise from here? Yes, I believe so, and I believe that could come in the form of possibly a delay in everybody getting back to work. Maybe the lockdown gets extended. Maybe some states decide that they want to stay in the lockdown a little bit longer. And you have the possibility of some credit issues starting to surface. Some companies that have to file for bankruptcy, like JCPenney did today. And we've had other companies actually announce bankruptcy as well. So those could be issues that weigh on the market. Do I think that earnings are going to be so gangbuster across the board that the market is going to fly right through here? No. Actually, I think the big 5 or 6 mega cap tech stocks are actually pretty well positioned. They've got huge cash positions. I think they'll do well. But I think the rest of the market, the industrials, energy, really bad, lending, bad. We've seen JP Morgan Chase, Wells Fargo, Bank of America, Citigroup. All of those stocks are down after posting earnings. The financial sector is definitely heading lower. That's a problem. So all of this points to more chance of a downward surprise than an upward surprise. And how does that impact my trading strategy? It means that if I'm going to be taking a stance right here, I believe that my probability of success favors being short out of the money bearish call spreads. So we're going to try and go pretty light on it this week. And the reason for that also is that we've got earnings season unfolding. We have not even hit, not even close to the peak of earnings season. That's next week. Once earnings season starts to unfold, we're going to have a ton of great post earnings plays. And that's something we have to really look forward to. And I'm going to show you a couple of searches to do that. And so let me start there, and then we'll go in and we'll take a look at last week's trades. But the searches that are going to be fantastic for us, go into Scanner, go into Bullish, and you'll see I'm using option Stalker tonight. So for those of you who are considering an option Stalker subscription, you'll see it on the website. And you can go down. Pop Bull is one of my favorite searches. And so this will be an excellent search for bullish trades. And then you can also filter this so that it'd be on a 1 hour buy signal, 2 hour buy signal, and a daily buy signal. And that's one that we can start looking at as the market starts to recover. But before that, buy into earnings is a great search. And here you can scan through all these candidates and you can filter them by clicking on, let's say, an H2. So these companies are going to announce earnings in the next 2 weeks. They have a 75% probability of rallying into the number. How do I know that? Because over the course of the last 12 quarters, the last 3 years, these stocks have rallied 2 weeks ahead of the earnings announcement. Now, I would typically rely on this search a lot more than I do right now. And the reason for that is that we've come from the depths of despair here and we've rallied hard. And so all of these stocks have run pretty hard. So I don't think there's a lot of edge to this particular search right now. But in the future, you bet we'll be using that a lot. Now, this is the search that I'm really going to be focusing on. Strong after earnings. Once the companies have announced, I want to see those positive earnings reactions, and I'm not going to judge the stock by what it did the day after. It might take 2 or 3 days for that stock to show its true colors, and then it'll be showing up on this search. And when we see that strength after the earnings report, then we're going to be selling out of the money bullish put spreads below that support and taking advantage of time decay, knowing that we should have plenty of buyers lined up because the number was good and the street liked the number. So we'll be all over that search. So that's another way that we can find really good earnings trades. By the way, after hours gainers and after hours losers will show you stocks that are up after the close. And I'm going to mark that H2 box off. So if you click these filters on, make sure that you take them off as well. And in fact, you can take off the option liquidity as well if you want. These are the movers after hours. So during earnings season, you'll be able to take a look at this and see which stocks are moving higher after the number. There's a counterpart called after hours losers. So these are going to be the stocks that are going to be weak tomorrow. So it's a really nice search feature. Earnings tonight. Anything on this list has been down today and it will report after the close tonight or before the open tomorrow. And you can see the candidates right here. Okay, so you can do the same thing on the bullish side. Just take a look at earnings tonight, and these will be the companies that post after earnings after the close today. This is a nice way to make sure that you're aware of the earnings announcements that are coming up so you can plan ahead. You can also go in and check pre-earnings options. So this is a complete list of stocks that announce after the close today or before the open tomorrow. They must have options on the stock or it won't show up in this table. But for those of you who like to trade over the earnings number, I don't personally do that, but I designed this for you so that you can see what the expected move is for this earnings announcement. Percentage-wise, how much are they expecting the stock to move? What's the average percentage move for the stock after the number? And how many times has the stock exceeded that expectation? So this has all been tracked over the course of the last 12 quarters. If you're a premium buyer, there's one that's exceeded the range 100% of the time. I don't know what the company is, but it's pretty easy to find. And if you were a premium seller, you like to sell straddles, then you'd want to come in and look for these zeros like on Honeywell or some of the other companies. Something that's real low like here, you got Morgan Stanley with a very low uh, times exceeded as well at 13%. So that's how you would use this table, but you can also just come in and take a look at who's announcing after the close. You can see the option liquidity, the open interest for calls and puts, along with the applied volatility. There's a group performance number in here also that gauges how well the group has done after posting the number. So lots of resources. I'm going to show you a couple of other tricks that we can use to find plays right now when we're kind of just before the earnings season unfolds. So I'm going to put up the custom search engine and we're going to go in and we'll take a look. Obviously, we want good option liquidity. So I'm going to put that at 1. The other thing that we can do is I'm looking to sell call spreads or put spreads. Now, what I don't want is I don't want to be muddling around with a company that's going to be posting earnings, let's say in the next week, week and a half. There's just not enough time for me to sell that premium. So I'm going to go in and I'm going to look at the earnings date projected. Okay, and so I'm going to select the calendar, and I would like to at least be able to sell premium for the expiration. This week is the 17th. We're not going to get any premium in 2 days, but I would at least like to sell the October or the April, April 24th expiration cycle, possibly the 1st of May expiration cycle. So I'm going to click on stocks that announce earnings after May 4th. So that'll give me 2 expirations that I can lean on. And then I'm going to go in and I'm going to select something further in May, maybe even into June. I don't care if they post in June, that's fine. And then I'll click scan. So what this search has just done is forget all the other criteria. I know that these stocks, I don't have to worry about an earnings announcement. Now I can just focus on the technicals and what they're doing. Are they strong relative to the market? Are they weak relative to the market? And so in this case, if I am looking for a stock that is weak relative to the S&P 500, I can go in, I can click weak versus SPY, and perhaps on a bearish trade signal. So let's see what we get. Well, lo and behold, there's one of my candidates right there, is DE. So DE we are going to sell a bearish call spread on, but you can see how easy that was. If you're looking for trades, there's one right there. And perhaps it's not on a sell signal. Let's see if that helps. That should widen out the list, and it does dramatically. There are all sorts of other criteria that we can use in here to find stocks, whether we're bullish or bearish. So for instance, if we wanted to find stocks that were near the upper end of the range, what we could do is we could go in and we could say, show me the 60-day range. And I would like to have a stock that within the 60-day range is near the upper quartile. So you would put in from 75 to 100%. Now, mind you, these are going to be incredibly strong stocks. You're going to see if anything even comes up. Sienna. Okay. Well, there's one that came up after a bloodbath like we've had in the market, and there you go. You can see it's up very high. But if that were your objective, was to sell out of the money, call premium on a stock that's in the upper end of its range, this would be a candidate for you. And you could see some long tails above body, and Sienna doesn't move much, so it may be a good candidate. So that's another way that you can use this search, is to define that earnings date. And we can also do the same thing with the earnings date previous. And this is particularly helpful. Let's say next week, once we've had a lot of companies that have announced earnings, I'll be looking for companies that have reported in the last 2 weeks, and then I'll be looking for all sorts of different criteria, whether it's heavy volume, relative strength, relative weakness, whatever the other criteria are that I want to use, then I can start using that data for it. So let's go in and let's take a look at DE. I've also got some other stocks that I found in a post earnings search. So I'm going to show you how to do that. It's very easy. Earnings date previous. Let's go back to April 1. I could even go back further, go to March 30th, and let's scan. There are all your candidates right in here. And there are a couple of stocks that I really like in here. One of them that we're going to try and get a spread off on is JPM. And you can see that JPM announced this week. It's one of the banking stocks that I had mentioned. We've got nice horizontal resistance here at the 105 level. We're going to see what we can do, but that's a big move. The stock is down to the $90 level, a $15 spread out of the money. Yeah, you're not going to get a lot for it, but we always want to make sure right now in this tenuous market that the stock has to come to us to get filled. We don't want to be out there banging anything away. Not right now. That time may come in a couple of months, but it's not right now. We need to distance ourselves from the action. We need to be cautious. That's how we've been able to make money so far. That's going to be our key to success again. So this is one of the ways that I found some trades today. I had to get a little bit creative. I had to use a number of different combinations to find some of these stocks, but let's get into the picks. I've got a number of them, and so I'm going to cut this part of the presentation a little bit short because I need to knock through each one of these stocks, and we need to be able to take a look at them and see why we like to trade. So first of all, in order to get to the staged order table, all I did was click trade, and then I went to staged. These are the spreads that we're going to be doing tonight. You can see the date is April 15th on all of them. And as you continue to go back, you can see some of the older ones that we've had on. So these were all fills that we had. SWKS, ITT, CRUS, Yelp. These are all trading for pennies, and all of them expire Friday. So in 2 days, 1 or 2 cents, you can buy these back. You can do that, release the margin, and then you'll be able to try and get some of these trades off. And then if you look at the next date, VLO was in April 17th. That should be expiring. And we've got Pepsi is the 24th, so we got a little time there. KR should be in great shape. And Walmart's still going to take a little bit of time, but Walmart has been rallying like mad. Look, we're short the 100 put for $2.20 in Walmart. We should take a look at a couple of these. Let's go in and take a look, see which ones we can reel in right now, and then we'll be able to kind of move on. But we'll take a look at. I'm going to move this off screen so we can take a look at KR. I think we should be able to buy that back for a couple of pennies. And on KR, we are short the April $28 put. And I'm going to bring that up. The April $28 put on KR. So I'm going to bring that option chain up. You can see the stock is at $32, and that we've got a 100-day moving average that we were leaning on right there. So that April 28 put is currently offered at 2 cents. Put a penny bid out there. Buy it. Slam dunk. Nice trade. So let's go in and take a look at another one. We should be reeling all these in and releasing a ton of margin. Let's see what else. We had the VLO April 17 $30 put. VLO, let's put that up. And let's go into trade. We'll look at VLO. That should be definitely offered at a penny. And each one of these trades was generating a 10% return. You could see, offered at a nickel. If you put a penny or two out there, you'd be able to buy that back. So that also looks good. And then I was going to take a look at Walmart. That was the April 7th. Actually, no, we went out farther in that one. So we're going to go out to the Walmart. Those are the May 15th $100 puts. Those are still going to have some premium in them, I'm pretty sure. So we'll go to the May 15th expiration, and the $100 puts are currently 29-cent bid offered at 51 cents. So we got to leave those out there. But what did we sell those for? I know we got a good price on those. We got $2.20 on that. So we have been just absolutely killing it with these trades. This is no time to spread our wings. We have to continue to be conservative. We're right in the middle of the trading range for the SPY. Market could go higher, could go lower. I made the case for more things that could go wrong than could go right. So I'm more afraid of a downside move than I am of an upside blow off rally here. And that's why we're going to be focusing on selling some call spreads. So look at all these, reel them in, take your profits, release that margin. Let's see if we can get some of the trades done this week. I've got 6 of them on deck, so we're going to take a look at each one of these, and I'm going to move this off screen, but I will tell you that they're all configured so that if you wanted to just click submit, it would route it to your broker. And then if you trade on your mobile phone tomorrow, you can log in using your mobile phone to your broker. These trades will all be staged there, but you'll notice that they're all for one contract, so you'll want to adjust the quantity, and then you'll also want to adjust the credit. Now, if there's a $2.50 spread between the strike prices, I'm trying to get a $2.50 credit for it. So you'll never get filled on these orders if you click submit. But they'll be working, and you will have the ability to go in and change that credit to what we want to get. And if there's a $2.50 spread between the strike prices, we want to get a 50-cent credit. If there's a $1 difference in the strike prices, we want a 20-cent credit. If there's a 50-cent spread between the strike prices, we want to get a dime. We're always looking to generate a 25% return on the margin that we have to put up. That's the rule of thumb. That's what I personally prefer. You may want to do something a little less aggressive. So we're going to go in and we're going to take a look at our lists here, and we're going to go into April 14th. So let's start at the top with DE and see what we're trying to do there. So on DE, you can see how the stock rallied here, and it hit this resistance level at the 148 mark, and then we had a couple of tails above body. Why it rallied this far, I don't know. All you have to do is watch the news and see farmers dumping milk and knowing that there are all sorts of shortages as far as chickens and eggs, and farmers are going through a very, very difficult time right now, and I don't see that they're going to have a lot of money to spend on tractors. So I think DE is going to hit a snag here, and if we hover over the earnings date, we can see 5/15 is the next earnings date. So what we'd like to do is we'd like to be able to sell a call spread above this resistance. So what we're going to be doing is selling a 152.50 call and buying a 155 call. So let's go in and take a look at that, and we'll bring this back in. And this is the first staged order that you'll see. There it is. Sell one of the May 1st 152.50 calls, buy the DE May 1st 155 call, and do it for a $2.50 credit. Gee, if I could ever do it for $2.50, let me know. You'll never get filled on that. That's the maximum it could be worth. But you should know that we're trying to get 50 cents for that because we've got a $2.50 spread between the bid and the ask. So let's go in. I'm going to put up DE, show you how to do it in the option chain. And so we would go down to the May 1st expiration, and we would scroll down, and we would see that 152.50 strike price right there. So we would click on that bid, and we would click on the ask of the 155s. And so if I do that, I'm going to see that the spread is currently bid at 61 cents. Actually, it's a negative 61 cents and offered at 198. So what's in between that? We don't really care. Pete, my God, how can I trade a spread like that? I don't even know where the price is. The options are a mile wide. How could I possibly know where that thing is trading? You don't know. I don't know. All I know is based on the probability of success, based on my technical analysis, I know the reward that I need to receive for doing that trade. And that reward is going to be 50 cents. If you can get 50 cents for this trade, I feel that my probability of success is very, very high in the course of the next 2 weeks that the stock is not going to be able to rally back up through this resistance and it'll expire before earnings. That's how we've been able to do all of our spreads so far. You saw them all in the staged order screen right here. We had to guess where we could try and get these trades done. Anybody that was trying to be precise about it, they didn't get anything done. They're left on the sidelines. We've been making great money for the last 4 or 5 weeks. We're going to continue to try. So we want to get a 50-cent credit for that John Deere spread, and that's selling the May 1st 152.50 call and buying the May 1st 155 call. 50-cent credit, GTC. Okay, cool. Let's look at the next one. Disney. Disney's been struggling. Let me do this. Put up the SPY. Market. Higher, higher, higher. Pulls back a little bit. What's the stock done? Zzz, nothing. Relative weakness. Even with this kind of market tailwind, the stock has not been able to rally. Okay, it's pretty good resistance here. If there were buyers who were anxious to get in, and you had a market rally like that, they would take out the sellers and you would see it marching higher. But it hasn't been able to. Sellers are keeping a lid on it. Theme parks are closed. ESPN has no sports to broadcast. Nobody's going to a movie theater, so all the Disney movies, Mulan, whatever else, have been postponed. I don't know how this company is going to make any money. They've got their streaming video service, and that was one of the reasons that it had a little bit of support in here. But a lot of those video subscriptions are being given away for free, I believe, to Verizon customers or whoever. So that alone is not going to float this company. Bob Iger is back. That was announced earlier this week. You would think there would be some excitement about him coming back to help lead the company out of this turmoil. No, we still see it as a sell. Okay, good. Let's take advantage of that. So what we're going to do is we're going to be looking to sell above that resistance right there. And so let me pull up the Disney trade. And so we're looking to sell one Disney April 24. So we're not talking a long time here, 1 week. We're looking to sell the 110 call. We're looking to buy the 111 call. There's $1 difference between the strike prices, so you better know we're looking to get 20 cents for this. So you'll see a dollar credit GTC. That's so that you can't get filled if you click the submit button. Let's go in and take a look at where that spread is actually trading. So Disney, we've got the April 24s. This is a nice one because it's a really quick trade, only lasts a week. Sell that 110, buy that 111. Off screen, it's actually 3 cents bid, offered at 28 cents. What are our chances of getting 20 cents? All we need is a little pop in the stock. And if we don't get filled on this by Friday's close, cancel it. We don't want to be in this next week if we get filled on it, because that will mean that the stock has been pushing higher. It would have to. We want to get a couple of days of option expiration in this week. That'll give us a little cushion over the weekend. So again, if you don't get filled by Friday, cancel this order. But we want to get a 20-cent credit for this trade. We may not be able to get it done. That's why I had 6 picks this week instead of 4. I know that we may not get filled on a couple of these. So let's take a look at our next one. JPM came out, had a huge bad loan write-off. They missed their quarter. Stock fell from $94, from 104 down to $90. So after the number, I'm expecting this weakness to continue. Everyone's going to be wondering what else lies ahead. JP Morgan Chase tightened their loan requirements for home buyers. I think I already mentioned that. So let's take a look at the staged order we want to do. We're going to sell one JPM May 1st. So we're going to have a couple weeks in this one. I had to go out a couple weeks to get a decent premium. Sell the 105 call, buy the May 1st 106 call, and we'll be trying to get 20 cents for that. So we're going way out of the money here, folks. We're not going to be close to that credit unless we get, boom, a pop in the stock. And I'm willing to keep this one on maybe even past Friday. But we need that stock to get back up to $96. We need a little bit of lift to get those premiums going. So let's take a look at where they are right now. Give us a feel for it. So JPM, May 1st. Come down to the 105s. And there you can see the 105. Click on the bid. 106. Click on the ask. So it's actually a negative bid here, but it's, let's say, zero bid offered at 25 cents. You're not going to get 20 cents for this. We need to see a pop in the banks, and that's okay because we could get one tomorrow. We could get one Friday. Whenever that pop comes, if it's a $2, $3 pop, we could be in business. We could get that spread off. So let's hope that we see that happen, because I think that banks are going to really struggle. And the next week of earnings is all going to be bank related. We've seen 5 of them announced right now. And in all cases, the banks have been trading lower. So I'm expecting that to continue. This is not a good environment for banks. And here you can see market higher, higher, higher. Stock lower. Well, this was earnings related. So that's good. We want to come in after the number. Lots of opportunity after the earnings announcement, and we have clarity and we know where the stock wants to go. So let's take a look at the next one. Yelp. All right. That one's an interesting one because it's one that we did a long time ago. You can see we did Yelp way back in here, and we sold a put. We sold the April 17th, expires in 2 days. We sold the $15 put for 65 cents. So let's take a look at that put first, and we'll take a look at the trade. So we're going to go in, take a look at Yelp. This one gave us a really nice return on that trade as well. And take a look at that $15 put. 1 penny bid offered at 6 cents. It is $3.50 out of the money. Tomorrow, with 2 days left, you'll be able to buy that back for 2 or 3 cents. I would not pay 5 or 6 cents. 4 cents only if I needed to release the margin. But by tomorrow, you probably see a penny bid offered at 4 cents. So don't pay 3 cents for that. You should be able to get it done. But we do need to buy it back in. So I also still like the stock, and I still like selling a naked put on it. So let's review it very quickly. We liked it at one time, and we still like it right now. Are people going to be using Yelp less because of the coronavirus? I don't think so. And they have a really nice cash position. So they've got $5.74 in cash, debt per share only $3.23, so they could pay off all their debt. The main thing is that their cash will sustain their operations. So I totally like that. And if you look, there's another metric here. You have current assets, just the current assets on your balance sheets, minus the total liabilities, and then divide it by the share, and you have a positive value of $3. So that is super, super strong balance sheet. Yeah, PE ratio is a little bit lofty, but not bad. This is not a stock that I would mind owning down at that level. So we're going to show you what we're going to do with this one. And I'm going to go into staged orders. And you can see here that we're going to buy the Yelp April 17, $15 put, the one that we've got out there right now. And we're going to sell one Yelp May 1st, $14 put, May 8th, $14 put. And we're going to try and do that for 64 cents. If you are not short this position, if you never sold the April 17, $15 put, you can just go out and sell the May 8th, $14 put, and you can do it for less. Let's say 60 cents would be fine if you're able to get that credit. So we're going to go in and we're going to look at the price of that put, and let's go into that expiration date, May 8th. Now I've already gone through and I've gone, this is the last expiration that we can get in under our belt before the company announces earnings. And you can see that $14 put is 2 cents bid, offered at $3.30. Wow. Okay. Where the heck is it trading? That's quite a bid-ask spread. We're going to try and get 64 cents for this by buying in the other option and by selling these. So we'll see if we can get filled on it. I think we've got a chance. You can see that Yelp has not been particularly strong. I like the fundamentals of the stock. I don't think it's going to be dramatically impacted by the coronavirus. If I can bring in that kind of premium, I'm happy to do so. We hover over the E and we can see that the earnings are not due until May 14th. We're selling the May 8th expiration. So we're kind of rolling this and seeing if we can get another one of these trades off. So we do have to put up margin for this. If you've already got the trade on, you're actually not going to have any difference in your margin because you're swapping one for the other. But if you're initiating this trade, you've got to put up $3. And if you're bringing in somewhere in the neighborhood of, say, 65 cents for it, that's going to generate a really, really nice return. Should be somewhere in probably the 16 or 17% range over the course of the next few weeks. So really nice return given that we've got 0% interest rates right now. And we like the stock. So let's go in and take a look. I do have a couple of bullish trades for you. Actually, Yelp was somewhat bullish. ZM, they shouldered all the bad news. This news in here was that they had hackers coming in and there were a lot of security concerns. This stock has really moved higher. It's rebounded very, very nicely. So there's still a lot of interest in it. And if I hover over the E, you can see that earnings are not going to be released until June 4th. And there's lots of time between now and then. So let's go into staged orders and see what we can do. If I look at the chart, I can tell you anything I could get in this 110 level, stock is pretty volatile. I would be pretty happy to take anything around that 110 level. So that's what we're going to focus on. We're going to try and sell a May 1st $111 put, which is right down on that support. And we're going to buy a 100 and did I reverse that? Yeah, I'm going to be selling the 112 put and I'm going to be buying the 111 put. So selling the 112 put right here, buying the 111 put. Because there's a dollar difference between the strike prices, we're looking to get a 20-cent credit for this. So let's go in and take a look at the price of those options. We'll back this out. And we'll go into that May 1st expiration. I've got to confirm that it was May 1st that we're looking at. Yep, it's a May 1st expiration. These options were pretty dang expensive, so let's go in and take a look. I'm sorry this is taking longer. Whenever I have a bunch of trades to go through, it's going to take me a lot longer to explain the strategy. And so there we've got the 112 put, and there we've got the 111 put. And you can see that it is negative 30-cent bid offered at $1.10. So it's just absolutely mile wide. So between this, could I possibly get 20 cents credit for this? I think so. And if I look at it, we don't have earnings between now and then. Everybody's gone gonzo over CTXS or any of these other online presentation software programs. So this certainly qualifies, and we've got a ton of distance down here. So I like this spread. I think that's a good one for a 20-cent credit. Even if the market pulls back, this stock has been strong. Today the market pulled back. Look what the stock did. Just like its name, zoom, higher. I like it. Let's do the final one here. Nvidia. Nvidia has been super strong, and they announce earnings on May 21st. So lots of time between now and then. And we're going to go into the staged orders, and we're going to take a look, and we're going to see that we're trying to sell a May 1st $240 put and buy the 237.50s. So 237 and 240, that puts us way down here below the 100-day moving average. Lots of breathing room. We've got a little horizontal resistance right in there too. So we've got $2.50 between the strike prices. Of course, we're going to be trying to get a 50-cent credit for this. And this spread will expire before the earnings announcement. So let's go in. We'll take a look at Nvidia. And we'll see where those options come into play. And the reason I'm going with May 1st, even though I could go further out in time, is that I want to get as much time decay in as I can. And the closer I go to expiration, the better. The other thing is that I feel that the market has a week, maybe 2 weeks at most, of rally left in it. And I don't want to be exposed with bullish trades if the market does come in. So most everything that we've favored today has been neutral to slightly bearish. So these trades are going to be neutral to slightly bullish. And so we go down to the 240 strike and the 237.50 strike, and we can see that negative 50-cent bid offered at $1.52. We're trying to get 50 cents for it. Is this doable? I think it is. I think we might be able to get filled on that. And I like Nvidia. It's got a good balance sheet, but it's got a great business model. You're using these cameras for everything, and all of the automated driving systems, they're looking to use the Nvidia cameras. And you can see how strong the stock has been relative to the market. Back when the S&P 500 was tanking, we sold a really nice naked put on Nvidia way, way out of the market. So the stock does tend to be a little bit more volatile, but you can see the strength. I'm going to put up the SPY. And look at that strength. You've got the market rallying in here. You can see how this stock has been able to make a series of higher lows and continue to grind higher. Even when the market's been kind of waffling around the last 4 days, it's been able to grind higher. So I feel that Nvidia's got a nice strong bid to it, and that it should be able to hold up well even if the market pulls back. So that's our final trade of the week. We could take a quick look at all the things that we're going to try and do. Not going to belabor this, but we're going to try and sell an out of the money call spread on JPM. Stock's very weak. It'll have to rally for us to get filled. We're going to sell a shorter term. This is the shortest term trade. We're going to try and sell a Disney April 24 110 call, buy the 111 call, Do that for a 20-cent credit. Disney very weak, has not been able to rally with the market. Yelp, we're going to sell that naked put in May, and we're going to reel in our April 17th put for pennies. Zoom, I think, still has some decent upside, and we can go way the heck out of the money and sell a bullish put spread with a couple weeks left till expiration. It expires before earnings. It's had incredibly strong momentum. I think this is going to be a decent one for us. Nvidia, same type of principle there. Sell it before expiration and take advantage of that current relative strength. Keep our distance way out of the money. So on any of these spreads, we're looking to make 25% on them. That's a great return. John Deere, I feel that that's going to continue to see weakness, and heavy equipment manufacturer. I don't think farmers are going to be spending a lot of money on tractors. They don't know what the future holds for them. So there we're looking to sell the 152.50 call and buy the 155 call. Do that for a 50-cent credit using that May 1st expiration date. So I'm sorry that this is a little bit lengthy today, folks. It just had a lot of trades that I'm trying to get off, and I really had to paint the picture for the market. But I've left you with some really good trade ideas. If you're watching this video on YouTube, it'll be released Saturday to the public. Our members will be in these trades, and I want you to go back and take a look at each one of these stocks and see how it's performed from the time the video was put out Wednesday night, and see how many of these trades we were able to enter. Look at what the stocks have done afterwards. That'll give you a feel for our performance. Please sign up for this YouTube channel. Turn on your notifications, and you'll never miss one of these videos. For the rest of you who are on board and who are members, for some of you, you're considering Option Stalker subscriptions. In the Option Stalker subscription, this weekly swing trading video is included. For many of you, that's going to be primarily what you look at, and there's an annual subscription price of $499. Each one of these videos comes to less than $10 per week. I know I've got a lot more than $10 worth of trades in this video. So good luck with your trades tomorrow. I hope we're able to get maybe 3 or 4 of them off. If not, we'll have many more good trades next week as earnings announcements start to fill in. We'll have a lot more candidates to look at. We'll have a ton more clarity. Thank you. I'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.